Hello, good evening, everybody. My name is Michael Asa, and this is a promised video, okay, on how to trade crash and burn. It is my prayer that you will all understand it. Okay, in the first short video I had given some indicator settings that you need to put in to get your chart ready and all that. Of course, we know that in every strategy or in every trading system, we have the setup and we have the interpretation of the setup, and of course, before you can apply the setup. So I'm not going to waste enough time, but I'm going to show something into direction. I don't know if it will be clear enough, but I will try my best also. Okay, first and foremost, I just want to do a recap. Okay, I am not really an indicator kind of person. I use price action, of course, but I combine it with indicators and they make my work quite easy. So you have to forgive me if you don't like indicators, but you have to put this up because this is what will help you in a way. So like I said in the first video, put this moving average for those who may not have seen the first video and they're just looking at this. Now I will explain this very carefully. The 200 exponential, the 200 EMA, I use it as support and resistance. That's all. Okay. And then the second moving average is 48 simple moving average. This is basically to help you determine the major trend in any market, whether it is crash and burn. And this is key. If you understand the major trend of the market, then all you will need to do is to be able to predict when the pullbacks in such market is over. And let me say this very quickly. You can also use this to trade V75 step or whatever you want to trade with. But I will show you how this works with crash and burn perfectly or near perfectly. So 48 is basically to determine the major trend of the market, and it's key for what we are going to do. The second part of or the third one is 22, and please, if there is anything you must put in that your chart, put 22. Shift 0 method is exponential, apply to weighted close. Please take note, it's not applied to close, it's not this one. It's applied to weighted close, HLCC or 4. It's applied to weighted close, and I had to make it very conspicuous, 4 pixels, so that you will always see it. Now let me tell you what this is, what this does. Okay, I will try. Now what this does is to let you know when a retracement finishes. We are supposed to, when you identify a trend and the trend has a pullbacks, okay, sometimes we don't know when we're entering the market. You don't know when, if the retracement has finished. So what this particular moving average does, helps you to know when a retracement is finished. Okay, when a pullback of a trend is finished. Now it can help you know that in smaller time frame, in bigger time frame, depending on your method of trading. If you're a swinger, you want to trade using higher time frame, maybe from H4, you have to wait for for that thing to pull back. And then when it pulls back in H4, you go check up. I'm going to try to explain this when I show you a trade example. You go check up with a smaller time frame where the pullback has gotten to. If the candle has gotten to touch this blue 22 EMA weighted close, then you know that that's most likely where you should look for entry. I'm going to explain that. Okay, so don't joke with that. Now we also have moving average 10 exponential. Why we have this is for crosses. When that 22 crosses over this, something happens. It gives you an idea of where the market is going in 2 hours time, in 3 hours, or in 1 hour time, depending on the time frame where you find the cross. It's perfect, it's good. Okay, so that on its own the red has less value if on its own. It can serve as a trigger point, but I'm really going to explain that. Now take note of the word trigger point. To trade crash and boom, you need trigger points. The trigger points are points or areas at which a candle will react, at which market reacts. For example, if you want to catch the drops in crash, all right, what happens is when there is maybe crash is buying, you come to a smaller time frame. You know, it will crash is supposed to be dropping the way it's designed, and then the things goes up, you know, start buying up. Then when it gets to touch the blue 22, right, that's a trigger point. At that point, there's going to be a reaction. I'm going to share a few trigger points, indicator or moving averages, that at every point market prices reaches that area, all right, something must happen significantly, and that's how you can catch or predict your crash and your booms. But remember this, you don't just do that. If there is anything you must know first, is the trend of every market. It's key because it will help you to remain in the market for as long as possible. And remember, you're not trading indicators, you're trading structures or patterns. I'm going to show you that. So that's that. Then we have 55. 55 is a trigger point. It's a trigger point in the sense that if it misses crashing at the touch of 22, the next place it will want to touch will be 55. As you progress through different time frames, always check where the candle has gotten to. If it has broken past 22, and the trend, remember, is a bearish trend in the case of crash, and maybe it's doing a retracement. The retracement is a long buy of crash. It has touched the 22. Maybe in 5 minutes it did not crash. Don't worry. Go to 15 minutes. If it touches in 15 minutes, it did not crash. Don't worry. Provided, remember, you are still in the direction of the trend. When it gets to 55, it is a sure, very sure, that it's going to crash. All right. I will let you know also, show you when you can close your trade. That is to say, the trend has been compromised or the structure has been compromised. So let's continue. Then we have 19. 19 also serves as trigger point. Now listen carefully. The 19 is basically used as support and resistance on lower time frame, meaning that every time you see crash get here, it's quite interesting what 19 does. Whenever a candle touches 19, it is bound to reverse there on a smaller time frame. And I'm going to let you how this thing works. Please remember that we are not really dependent on this moving average. We have a pattern, and I'm going to share a few of those patterns. And I want you, like I said, check up divergence, read it up, and of course for some other market structures and candlestick patterns. So it will help you, because the most important thing is to understand the pattern. Then this will just serve as support systems. Okay, so we are done with that moving average. We come to the second one, that is the indicator window 1. We have relative strength index 6, and then we have the period to be 90, 5, 50, and 5. Most likely we see this in many places. Okay, but how do you interpret it is very important. It's key. All right, now this relative strength index is not for the trading of any other indices or asset. It's basically for the trading of crash and boom, and I will tell you how it works and how it applies. Now the second one is stochastic oscillator. The settings, if you see what is happening, is the same setting of Papa Jimmy. Of course, I got into this group because I have a lot of love and respect for Papa Jimmy, and I really wanted to learn how to trade B75 too. Okay, all my life, ever since I got into trading binary, I've traded crash and boom alone. So I needed to learn how to trade B75, and I've learned a lot, and I like it. But I'm one person that likes to make fast profits. B75 can do that fast profit thing, all right? But sometimes you have to swing. I'm not very used to swinging trades. I can have the patience of a day, allow my trade to run for almost a day. If I got into a bad trade, I have the confidence it's going to come back. But to hold position for a long time, well, it's not really bad, but it's not my thing. I like to maximize every opportunity, and that's why I feel that crash and boom for me makes a lot of sense. V75 makes a lot of sense too. Okay, so these settings is actually from him, but the only thing I did was to come to the levels, and because I've studied it carefully as it relates with crash and boom, that every time this the you know the stock lines gets to the 50 level and the 70 level, there is tend to be a reversal. I'll show you. So at that point, I also check. Now remember too, however, that you can use the stochastic to predict when a crash is coming. It's not, it may not be automatic, but it could tell you, it can tell you what will happen in 2 hours, depending on the time frame you are. All right, so I'll try to show you that. God help you. So let's see. Let's continue. So and then we have the last one, the relative strength index. Okay. Now this one is also for trading of crash and pump, not for any other thing. And then the period is 1. When we put a period 1 in RSI, you are telling RSI, I do not need your own services. All right. It means you are just putting up a line. The essence of the RSI is just to build, the support, to build the overbought and oversold zone. You don't want the RSI to be the one calculating the overbought and the oversold. Is that okay? So that's why we put 1. You want to use something else to calculate the overbought and oversold zone. Anytime you put period 2, period 3 and above, it means you are looking for RSI to calculate something. But this one, we just want to carry the frame of RSI. We are going to invite something else to do the calculation. So just look at this stuff: 90, 91, 92, 8, 9, 10. Now I'm trying to make this line tick so that it's not as if this really makes sense, or it really have any value. But please just put it up so that your lines, your borders will be thick enough and you will see clearly. Now it may not really have a significant stop, because why not use 90 and use 20 below? Maybe use 90 and use 9, because it will still work. But I decided to do this because I want the borders to be very thick, and that's why when we get here under the indicator window 3, we have moving average, 5 exponential. Now this is what we want to calculate the overbought and oversold, and it is very important. The essence of this, however, is to be able to calculate to a certain degree the exhaustion levels in crash and boom. Now you understand that if you are trading crash and boom, at times crash buys for 1 hour or even more. Have you noticed? Without crashing. Why? Now such questions you will not have to ask yourself, because if you enter a trade and the thing is dragging you for 1 hour and the thing crashes and cannot meet where you pick that entry, you discover that after that a little crash, you start going another way and you are still selling that market. It means you had missed to understand that you were not in support of the trend. Okay. Sometimes you see me use a 20 lot size to buy crash and all that. I can only do that because I understand levels, I understand zones. I understand that this market will not crash on me, and I don't think it has met me before. It's only a few times, which is not highly significant. Please, I don't want to encourage anybody to buy crash, no matter who you are, except you really know what you're doing. Like Papa Jimmy will say, sell crash, buy book. That has been my philosophy every time. Except you want to swing crash, so you buy from the swing low and then you sell from the swing high. That's to say, you can leave it to run. Use the minimal lot size and just allow it to run. Forget the crashes. Just believe that anyhow it is, before the end of 1 week, you will eventually get to profit. If you have that kind of mentality, you can trade it. But if you want to trade comfortably, then you need to understand the trend, and this can help you actually. All right, it can help you buy crash comfortably without stress. But I will still advise you, for those who don't have the confidence, who don't understand the mechanism of the market yet, please just go with the one that is easy. Just go with the flow. Sell crash and buy boom. And one of the things I want to say is that what I'm sharing with you now is going to be very helpful in your ability to buy crash. Ability to sell crash and of course buy boom. I'm not saying it may not be 100% perfect, but I know that somehow something will connect, and then you'll be able to catch what I'm trying to say. Please remember that this is not guesswork. It is something that I've used over time, and I keep trying out stuff. So it worked for you, I believe, and it has worked for me. It's going to work for you. All right. So let's get there. Now this is how my chart looks like. Crazy, but it makes sense. Okay, it makes sense. It makes sense. I don't want to go into some mathematical detail of crash and boom. There's some mathematical detail about it, how you calculate, how the movement moves and all that. So it doesn't really have a normal market structure. So we ignore all of that. We want to work based on what we have seen. Please, the first thing you need to do is to, when you open your crash in the morning, you want to start trading. The thing you need to check out is, first and foremost, what is the structure of the crash? First is that if you can't find a definite structure, the second question you ask yourself is, where is the trend of this crash? Now remember, even if this market is choppy as it looks, if you check what is happening here from the box, it doesn't necessarily mean that there is a trend there. Okay, it doesn't mean that there is really a trend there. That is a choppy market, going doing that kind of stuff. But guess what? I can make $2, $3, $4,000 just within this space. So by the time you are looking for, you say, okay, I want to look at the trend. You come to maybe H4 daily and you don't find a definite trend. You say, okay, you ignore it. No, 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 no. That's not exactly what I mean. What I mean by trend is that just find out. Because, for example, look at the cross I'm using. From here, from this top now, 13176 to this point, to 13062, is a lot of money if you know what to do. So from this top here to this bottom is a lot of money. Even if it is a choppy market, the good thing about crash is that you can earn from it. So what do? If you come to a higher time frame, which you should start with, and you discover you cannot find a possible trend, it's a choppy market, does it mean you will not sell it? No. Does it mean you cannot maximize on it? No. What do? You come to the next time frame. When you come to the next time frame, your eye is like a scanner. That's why I really want you to go back and read up on divergence and a few other stuff. You're scanning the market with your eyes, all right, and then you still cannot find anything good enough. It's okay. You come to 30 minutes time frame. Okay, 30 minutes time frame seems to make sense. Okay, one of the things I want you to note is, don't do guesswork. Now, just like I'll say, if you look at this chart, the M30, now look at your stochastic also, you will discover that every time the thing got to the top and started coming down, one thing that was very key is that the orange color stochastic will cross over the green color. I just want to say that. Look at it from the top. Now this is 30 minutes. As soon as the stochastic get to the top, there will be a crossover. Now, don't depend on that alone to pick your trade. Remember that your target is not to trade and allow it to run. You just want to pick some profit, and then, now this is a choppy market, so you have to pick your profit and go. When I will show you how to allow your trade to run for a long time. Okay, when you find a good trend opportunity. I'm speaking about not being able to find a very good how do we call it now, trend. Now take note. Let's go back to H1. There's something I want to show you. If you check, based on the definition of what I said, the yellow line does, just going back, the 48 in this case, I don't know, I can't even use cross stuff. Okay, now look at this. You see that? You see where you see that where I just made that circle? As soon as the yellow crosses over this point, that was the end of the downtrend. The uptrend. Now watch carefully. You discover that every candle was forming below the 48. You see, every candle was forming below the 48. Every candle was forming below the 48. Even when it went as far as touching the 48 line, it still came back. Now the 48 and the 55 are close to each other every time, but as soon as it crosses over, and this other candle, please take note of what I'm showing you now, very important, and the blue also crosses over the red, and it also crosses over the yellow, and it starts going up in this case, you know that the trend has changed within that time. It may not be the overall trend, because if you go to daily, you will see something else. But if you're using it for H1, make your decision on that H1 at that time, although you must make reference to your daily time frame. So please, let's continue. You see what happened? Ever since that time, it has been going up, and that is because the candlesticks are trending upwards, and the 48 is below. So we can call this a buy trend. Now listen, if you were swinging and you pick it from the bottom when this thing cross, the crashes will not meet you. It will go up and come down. Eventually, you still be in profit before it start coming, and you check. As soon as it cross over again, and then the candles are below the 48, it started trending downwards. You can see before it got to this chubby area where there is a lot of mix-up. You see what I'm saying now? Good. So the first thing you do is that you check where the market is trending. What you are trading, you're waiting for the retracement. Now look at what happens. I don't want to go too far. First and foremost, let's come to 30 minutes. So you look at the stochastic. Every time the thing got to the top here, Lord help us. Every time the thing got to the top here, just watch. I'm not saying this is very key now, but every time, in a market like this, what I'll do is that I'll just draw a box, put my eye there, and notice that every time, and secondly, there is a divergence. Please take note, there is a divergence on this market. Okay, so you can almost predict where the market will go. That if you have found a divergence does not necessarily mean it's going to play out immediately, but it's telling you that what divergences tells you what is going to likely happen in the future. The future does not mean it could be in the next 1 hour, could be in the next 2 hours, could be in the next 3 hours, could be in the next 1 day. Okay, so but anything that gives an idea of where something is going in the future, it means you already have an advantage of that stuff, so you can prepare for it. Okay, so now, so that is it. So they look at something. Please follow me, because I pray I'll be able to pass the information well. Now, let's come to 15 minutes. Okay. Now, still using the principle of the 48. Just be studying the 48. Just be studying the 48. You understand what I'm saying? Okay, let's come to 5 minutes. This is very important. Very, very important. Now, follow me closely. I will stop at 5 minutes and begin to show you what I want to show you. Now, look at this again. Look at this again. First and foremost, let us assume, please, this is 5 minutes. Now, let's go to daily. I want to show you something. Let's assume that in a way we understand that from this box, every time it gets to the topmost part, we have a resistance. And then it's coming towards the support of that box, okay? So when it was at the top here, okay, we know that by and large it's going to start selling. However, okay, now when you come to 5 minutes, you see the way this candle is buying up. Now look at where my stochastic is. I will want this stochastic very good. You see what is happening now? They are trying to touch each other. As soon as it gets closer to each other, I would have placed my cells around here and watch it. Okay? Because the next thing that will happen is this. Something people say, what if it lags? Maybe it drags before it drops. Okay? If the trend is bearish, it will not lag for a long time. It will drop. Now, that is not even what I want to show you. Please follow me. I want to show you something now. If I come to 1 minute, now look at this. Look at the way the thing is falling. Look at the way the thing is falling. Okay? There's something I'm looking for to show you. Please be patient with me. I believe that you will still get it, however. Now, this is M1. Please, you need to have a lot of patience. That's why when I call trade on crash, I say be patient, leave it. It will play out. Look at what I did. This is the first zoom level. We have 5 zoom level. 1, 2, 3, 4, and 5. I'm talking about the first zoom level. You see the zoom level there? Now, look at my RSI1, the blue line. As soon as the blue line touches 90, this is what I mean. Sometimes it will drag, it will delay. But remember that while you're taking that sell, you're supporting that sell is because, number one, when you look at the higher time frame, it is at the resistance. So you are expecting it to fall. So this was like a pullback or something. Okay? Secondly, you look at that this thing is already at the top. It is just a matter of time. It will need your patience. And then the thing will drag down. If you saw this kind of situation, all you need is patience. There is no way crash can buy forever for a long time, except the overall trend is bullish. Then you have to avoid, placing sales in areas where you'll be trapped. Now, after that drop, it came down. This thing is going to drop again. Although, now look at what I was explaining. Let me go back to 5 minutes. Please follow me. I'm trying to make sure that I pass this message very well. Now, remember what I said. Now, please, there is a cross here. Every time there is a red crossing over the blue, okay, from where you see it now in this kind of pattern, it is a must, not an assumption. It is a must that it's going to come down the more. Now, if I go to 15 minutes and I found a cross, it's going to drop the more. The bigger the time frame where the cross is found, the longer the sell down. Okay? So because you know that will happen, look at the trigger point I'm talking about. How do I catch a drag? I mean a crash down. If for any reason whatsoever, this thing that you're seeing, this current market, gets to this 19, take note that the ash color is the 19 SMA. Apply to low. Excuse me. If it gets there, first and foremost, the stochastic is almost at 90. So I know that somehow sell is coming, but I will not take it. I will wait. If it gets to this 130.76, being that it has touched the 19, that's where I will place my own sell. I will load it up. You are not taking this sell anyhow. You are loading it up so that in case it drags you, you can close. If it gets to this, the blue one is the perfect one. There is nothing that will not make it to react. There will be a reaction at that level. Then you load up. What I do is that I load up. If the account I'm using for that time is a huge account, I load up, some good lot size. And then the thing will, just one drop is enough to make you, to give your target per day. So, so many informations to give in a short time. But look out for that, the blue line. Let me try to get something else. Fine, please, just follow me. I don't think I've seen a very perfect example from CE 1000. Okay, please look at this one. Let's go to daily and start from daily. First and foremost, if I was a swinger per se, I would have still been in this trade till today, because I knew it was going to sell this long. That as a trader, your decision must not be fixed. Your decision must be based on what the market gives to you. You could say it's going to buy, but the market shows you something else. You must be willing to change your decision. It is important. Why people blow accounts is because they are so fixative. This thing will buy no matter what. This thing will buy, and the trend is changing before your eyes, and you still believe that it's going to buy. The market has given you reasons that it's not going to buy anymore. You don't just have to believe. This one does not mean that I believe God. No, you have to change with what the market is showing you. Ability to make decision immediately makes you a better trader. You don't just stay in one position and say, no matter what, I'm not quitting this market, it must buy. No. Unless you have reason, very strong reason why you will not change your mind. And if you have reasons also why you should change your mind, don't say you believe. Change your mind. That's what makes you a good trader. You will never see me have, I can't tell you that I don't make losses. It's not true. I do. But the point is that I will never make a loss in the whole day. No matter what, I must gain the market that day. But if you see my trades, you will see that I make losses too. Okay? So, but the most important thing is let your losses be small and your profit big. Now look at something. The first thing I did was some days ago, I did something like this. I knew that if it breaks this trend line for any reason, please, I may not draw it very well because I'm teaching now. Okay? If it breaks this trend line for any reason, I don't know when this one started becoming strong. Okay? I just told myself that if it breaks this trend line for any reason, it's going to sell down. I knew. When I saw this market, my positions were loaded around here. This market started selling at 1 a.m. of a particular day, maybe 3-4 days ago. And the thing dropped. I think I closed those positions around here when I got to this supposed support that it was. Before, there was a lot of movement around here. I even told us it was going to buy. On second look, I discovered that the buy is not going to hold and it's going to sell. And from what I'm saying, if it breaks this particular zone, it's going to come back to trying to test the all-time low. Okay, but that's not the most important thing. Please understand what I'm saying now. The first thing was that I saw a pattern that, look, if it breaks this trend line, it's going to come down more. That was the first thing that happened. The second thing was that I saw a cross of the blue and the red on daily. If that happens on daily, my dear, it is going to sell for a long time. The same thing with buy. But don't depend on just that alone. Now, look at what happens with H4. Now, you see what happens with H4? Where that trend line cuts across, there was a cross of the red and the blue. Please take note of what I say. If for any reason they cross, the 200 EMA crosses over the red and crosses over the black, what you're going to have is going to be a very strong sell trend. It has been proven. When 200 EMA crosses over the 10 exponential and the 22, what for any time, whether you're trading V100, V75, V whatever, just you know that that trend is going to be huge. Don't be in a hurry to change your direction, to change your mind. It's going to sell for long. Now, but the question is, what if it's selling? A lot of people would have entered this market and then the thing drags them behind and they quit. Don't use H4 to make your entry. Come to M5. Let me show you the secret. Now look at it. I will take you behind. Now follow me closely. You will see something. Now check. Every time the candle was pulling back to touch the blue 22, okay, like in this case, it got here, it will see, it will drop. Every time it tends to touch the 22 moving average, and it was trending below the 22 and the 19. You see that? This is a perfect sell trend. Every time it tries to pull back, however, I'm using a small time frame now. The same thing applies. It pulls back, it touches the blue, it will drop. Take note, this is 5 minutes. You can also spot that with 1 minute. Now, every time it comes close to touching the blue, take note, if you've identified the trend and look at what happened. The 48 so far, that is the yellow simple moving average, is trending above the candle. So you are sure that you are actually in the perfect sell trend. Now, sometimes you can just enter the trade and let it go. Now, look at this. Now, look at this. Please follow what I'm saying. Don't ever quit a market until what I want to show you now happens. After he went up and broke past the 19 and broke past the 22 and was going up, you would have thought, this market has changed direction. No. Now, but take note. If, for example, in my own case, maybe my first position will be here. When I see this breakdown, okay, my position, I would have taken that sell. Anyway, that drop would have given me money. But if I was to wait, it would have dragged me forward. I will never be scared. One of the reasons is because I understand that the market is still a downtrend. So what I'll do is that as soon as it gets to 55, remember what I said about 55 initially, 55 is a trigger point, the last that you can trust. When you get to 55, I will put more position and wait. There is no way it will not react at 55. Even if it delays or break, I will not give up yet, because you have false breakout. You must have patience when you're trading, whether it be 75 and then the crash, okay? Then, as soon as that happens, you see what happened? It continues selling. This particular pair, this 735, will continue to sell. Every time it gets towards the blue, that's it. We call that area a trigger area. Something must happen, must come down. Okay, so that is why if you check, the thing has been trending downwards. Now the same thing applies with bigger time frame. Now this is H1. Anytime it gets, just use your eye. Every time the thing gets to touch the blue is a constant. The candle don't easily break out of it, but when it does, forget the blue, look at the 55. Make sure your decision is within this area. Pick your trade as soon as you see a market is trending backwards. Crash does not drop completely. There will be time it will do pullbacks. But when you make an entry in the pullbacks, you use the blue, the 22 for your entries, use your 55 for your entries, and you can drag, you can do that. Now, if you check, I did not consider every other stuff. Now look at this. I'll come back to M1 and I squeeze my screen. Now look at what happened. Every time the thing got to touch, the blue attempted going upwards, you place your sell, it falls like the walls of Jericho for you. Every time, now this is a perfect trending market, so you may not have the opportunity of seeing it on top. But every time you see it on top, like this, just look at where that place is. Look at this. Just expect that in the nearest minutes, you'll be having a very serious drop. But before this decision, understand the original trend of the market is key. It's very important. So I think with this, the same thing opposite applies for a boom and crash. Let me very quickly, I don't want to digress, maybe go to V75 or something, but this thing really works with those other stuff. Now let me go back to, let's look at boom for an instance. Okay, now I want you to see something very close. This is H1, so let's use H1. You look at, keep your eye on the yellow. The yellow is trending below, the candles are above, so it is a bullish trend. But the fact that it's a bullish trend does not mean you should enter at any point. It is important. So where will I enter this market if I were to use H4 to trade? Now I will wait for when the market retraces to touch the blue area. You look at that, you see, every time it comes to the blue area, it will fire up. Now I will not place this trade a buy until it touches this blue area, and then I will fire up again. Okay, so the blue area are retracement points, or what we call end of retracement in a market that is trending. Okay, so that will help you a great deal. Okay, let's go behind and see what happens. Please keep your eye on the candle, the red candle before a green candle start. It always at the blue. The blue serves as trigger points, and you shouldn't miss it for anything. The blue serves as trigger points, or what we call retracement end, and you should not miss it for anything. Beyond this point, you must understand your daily high and your daily low. Those things, work too. You must have a good idea of price action generally, support and resistance, if possible. How to most, and I will recommend you read about order block too. That is institutional order flow. It will help you to make your decisions good enough. All right, and then I'm trying to say, okay, let's see what happened with boom 500. Why did I say that boom 500 was going to buy? And then we are having a funny experience. Now look at this. This is going to buy. If you check, I have drawn a box around that place. Okay, I've drawn a box around that zone, going backward and all that. Now look at what I said as yesterday was going to buy. I trade what I see, and whatever shows me was good enough. I had the feeling it was going to buy better. Feeling is not enough. You must have very strong reasons. Now, from the pattern of this market, you would get to see that looking at my indicator cross, as soon as this thing crossed here, please just follow me and forgive me for any inconsistency. As soon as that cross, the good thing is that the cross would happen earlier enough before all of this part, and that's why I was able to make that amount of money that I shared to encourage us to hold. That I slept off, and although I closed this position because the profit was enough, and then I left. So when I saw the cross, it shoot up to this point. My issue was that as soon as I saw this point, please look at this. It works a lot. As soon as this happened here, look at where the stochastic was. Okay, the stochastics has crossed each other around here on H4, and as soon as that cross, there is no magic you can do about it. It's going to come down. So my expectation was that I was coming to retest a particular area and then maybe continue going up. And so then I had to change my mind. But then I will not quit this market just yet. Okay. Now, second thing is, if you come to H4, because these things are very important. Please look at this. You check now that the yellow now, look at what is happening. Except this happens, then we can begin to say that this is going to sell. But so far, this was trying to form a bullish trend. This was supposed to be a correction, and it continues. So that is what I am thinking. That's what I believe it should be. But look at this. Apart from that, thank you to Sir Jimmy who did this. Now look at this. I also look this. Now this is already at the buy zone, but it may consolidate there for a while. Why? Because this place is actually a kind of support. So it may consolidate for a while. While consolidating, I'm waiting for this thing to cross each other like this. As soon as that crosses each other, I believe that it will continue to buy. And if my prediction is right, I will say that boom 500 will buy from 1 a.m. today at the form of a new candle. That's what I'm thinking. It may, this is actually a support. Okay, it may actually do something like this. From here, you start going up. That possibility is very high. There is no way this thing can sell this far again. I can tell you for sure. Why? Is because structurally that's a support, and secondly, the stochastic can also help you. It will tell you it will not be immediately, like I said. It will not say that this is going to happen just immediately. No, it's telling you what will likely happen in the future. It can be 1 hour, can be 2 hours, can be in 4 hours, and could be in 8 hours, can be in 24 hours time. And so my very best bet is that before 1 a.m. or by 1 a.m. today, this thing would have gone up. This thing would have gone up. It would have gone up. Please, I want to say this. If I know a lot of people will ask questions, they don't understand. I'm trying to make sure that I fulfill my own part of saying I will make this video. There is no magic about this whole thing. I'm telling you what works for me. But in case you don't understand, let me say this. Don't be motivated by people's results. Yes, it has a way of encouraging you that no matter what, you will get there. I want you to be motivated by your own discipline. It is important. It is not a must that you must meet your targets every day. No. There are situations where the market is not favorable for you. You let it go. In fact, I don't really trade B75. Just like Sir Jimmy said, he said just master one or two. Master one or two assets, and then you will gain mastery over time. So what I do is that I have mastered crash and boom. If my setup for crash is not good enough, I'll go out, I'll look out for boom. That's why I had to trade the four of them. I consider them to be two, crash 500 and crash. Crash and boom. I just consider it to be, even though they are 500 and 1000. I will not trade steep. I don't look at that. I will not trade V75 sometimes because I don't have the patience to wait with it. So now, what is the idea? You have $100 account. You don't want to make $200 because you want to impress anybody. That is wrong. If all of us wants to do that, we will be living a fake life. So what is the thing? You have $100 account. The first place you have to start is to measure yourself with what happens in the current reality of Nigeria. What is the minimum wage? So if at the comfort of your home, you can make $15 from that $100, you can make maybe $20 by stretching. That's a lot of money. Now, what I say is, if you continue to make that, meet that target, it will build your confidence over time. There's something that I've discovered over the years. If you continue to trade and you keep losing, you are losing your confidence. A time will come that even in a demo account, you cannot place a trade because you keep losing. But if you win, no matter how little, every day you win, it adds to something. It builds your confidence. Now, when you win, like he said, journal, check why those trades did not behave that way and all of that. So you tick, okay, I was able to meet my target today. And there's something I tell people. I say, when you meet your target, leave the market. Take a break for that day, except you are swinging and all that. But if you are trading intraday, you miss your daily target, please leave the market. No matter how juicy the market opportunities are, don't stay much. Leave the market. It is very, very important. And it will help you. For some of us, we have little, equity, no problem. Grow that one. You make $5 today is not bad. You make $10 today is not bad. You can even make 100 is not bad. Don't begin to measure up or try to beat up somebody or try to impress anybody. It doesn't work that way. Okay, all these things we are doing, in reality of it, we all have our different targets. Okay, so I want to appreciate Sir Jimmy for the privilege to share this idea. Like I said, I'm just offering help. Okay, and I know a lot of people are in desperate situations in these trying times. Don't act out of pressure and you want to by every means make money. No, you don't fight the market because you want to get back all the money you've lost. No, take it easy, be patient. Over time it will play out. And then another important thing is, please, you must respect your plan. There are people who said, okay, this is the losses I want to use, this is the target I want to make, and they beat that target, they break it and say, no, respect your target. It will help you to be disciplined and be profitable in the long run. So what am I saying? In summary, as we go. Okay, very important thing. Somebody said I should show them divergence. Okay, please, divergence will really work. We have bullish regular divergence for trading crash sell. I mean, regular bearish divergence for trading crash sell, and then bullish regular divergence for boom buy. Now I said you can use a smaller time frame to predict that. To predict those divergences. Now, divergences are good, but let me look at this. This was a typical case of a divergence, although it's not very clear, but this is an idea of what it is. When higher highs are created in prices, or you call in your listing, and then your oscillator is making higher low, okay, it's making lower high, right? It's making lower high. Now, in a way, remember, this is not well drawn. It has to be something like this. It must be vertically accurate. If you were to draw a vertical line, it should be able to match that. When I see this, actually I saw this and I knew that no matter where this thing goes, it will sell. So this is a typical example of divergence. When you meet this phase 3, know that no matter what, you're going to have a sell. So anytime the thing goes back around that area, be sure of the sell, provided your oscillator is showing you, it's slanting. Okay, is that okay? So now I can assure you that this market is going to sell for a while. All right, crash 500, crash 1000 is going to sell for a while. And this is where my TP would be on the long run. It will be on the 200 EMA, which serves as my support in this case. So please, I think that's why I don't know if I've been able to help anybody. I don't really know. I really don't know. But whatever is the case, let's see. Let's see if you understand anything. And if you don't, I believe that constant practice questions will help. And I know that God helping us, will all succeed in all of this. I want to thank you for taking your time to listen to the long video. It may make sense to a few persons, it may not make sense to anybody. And I want to appreciate Sir Jimmy for the privilege. I mean, thank you, sir, for all you do. God bless you and keep us, and trusting him. Thank you very much. And God bless everyone.